Hey everyone, it's Andy here. Just want to give a quick update today on the latest numbers that have come from the IRS on changes to 2022 401k, IRA, and Roth IRA limits. There's been quite a few changes thanks to higher inflation and the way these are adjusted annually. So as you plan ahead for the next financial year, pay attention to these because these are the most common vehicles people save for retirement. So the IRS announcement, the headline figure which came out at the end of November, this is for 2022, they normally release the annual adjustments around November. So you see this came out, and I'll post a link to the full IRS guidelines here, but the biggest change is that the contribution amount has going up to 20,500. And just as a reminder, for most of these 401k IRA plans, there's an element of what you can contribute to get a tax deduction, but also subject to certain income limits that allows you to make that a taxable or tax deductible item. So you got to look at both those factors. And each of these plans has different rules. Employers have the standard structure, but then some can choose to increase how much they match and those sort of things. So there's a lot of detail behind this, and I'll post links to some detailed articles I've written about each of these things. But just to give you a highlight, this is all based on official IRS numbers. You've probably seen your HR department will send these out as part of their benefits enrollment or adjustments for next year. But a 1,000 increase may not seem a lot to a lot of people, but 1,000 compounded over 40 years can add up to over $100,000. So this actually is a big change, especially the younger you are and the earlier you start contributing. So in terms of the key changes that came out of the IRS release, 401k plans have all had a $1,000 increase. Now, over the last few years, they've either been stable or gone up by $500. And I'll talk about that a bit later. But this year they've had a pretty big jump. Again, the adjustment is based on inflation plus some predefined factors. So this 1,000 jump is a pretty significant jump in the context of history. And this applies to 401k, 403b, certain thrift savings plans, and most 457 plans, which cover government employees, federal workers, and military employees. So there's a lot of people impacted by this. Close to probably 60 million workers would be affected by this change. The income and phase out ranges, so those are the ranges of income. They've also increased a lot, amongst the largest, again, driven by inflation. So you'll see that the amount of income you can earn to start claiming the full deduction or a partial deduction has increased a lot. And especially for IRAs and Roth IRAs, that'll make a lot more people eligible to get these deductions in a tax effective way. And I'll show you that to you a bit further in a few slides down. And then the one thing which probably was surprising is that if you're over 50, you can do catch-up contributions of $6,000. These have not changed this year. So I thought those would go up by $500 in my original estimates, but they've stayed flat at $6,000. So that's probably the one thing that those over 50 were hoping for, because the more you can contribute to these accounts in a tax-effective way, the more they can grow tax-free, and you can take them out. When you take them out, if you take them out Roth IRA, there's no taxes, but it allows the compound effect to work more the more you can contribute. So in terms of 401ks, the biggest change you can see here over the last few years on this table is I've got the last 5 years of 2018 and 2020, and I'll put a detailed article which has a lot more rules and maximum contributions and how it all works out. But if you look at it, your 401k contribution limit for 2022 has gone from 19,500 to 20,500. From 2018, it's sort of been increasing by 500. It was flat last year from the previous year, but this year was a big $1,000 jump. And again, like I said, this will probably end up being, if you start in your 20s, almost a 50 to $100,000 increase by the time you retire. So it has a pretty big impact over the long term for those that can contribute up to the maximum limit. So what the other column is the maximum employer contribution amount. So this amount, basically, the third column here is what your employer can technically contribute on a behalf. A lot of employers match 3% to 6%, but some employers, especially if you're highly compensated, you can actually get a pretty large employer contribution. Again, this is tax deductible, tax free until you withdraw it at retirement. So it's a pretty nice benefit if a lot of employers give it to them. So in total, if you really got, your employers to be very generous, you could actually get up to $61,000, which is a $3,000 increase from 2021. May include the personal contribution that an employee can make, which is 20,500 across all employees. That's the annual limit, not just per employer, plus all the maximum employer contributions. You could do 61,000. As I mentioned, the catch-up contribution stayed at 6,500. It did not increase past from last year, which is also 6,500. Again, this is only for those over age 50 as of the end of the year in question. So if you turn 50 anytime on the year, you can claim the 6,500 contribution. Roth IRAs, I think, are the secret weapon for those who are able to maximize their retirement savings. Roth IRA, unlike a regular IRA, allows you to contribute on an after-tax basis, but that all contributions you make and any gains when you take it out after retirement are tax-free. Further, you don't have to necessarily take them out at a certain age or the required minimum distribution. So they become a very powerful vehicle. You've probably heard a lot of stories of people who maxed out their Roth IRA with a small investment, and then it's worth millions or even billions in some cases for people, and they never have to pay taxes on any withdrawals. And so that's really the secret weapon of a Roth IRA, is that allows you to make sure that any withdrawals after the qualified retirement age are tax-free, which is huge because taxes, as most people know, don't generally go down. So if you can contribute to a Roth IRA, I would definitely recommend you do it. Now, for 2022, the Roth IRA contribution limit has stayed the same as 6,000, 7,000 for a catch-up limit, same as the IRA levels. But the difference is, with a regular or traditional IRA, you can contribute the 6,000 even if you're above the income, you just don't get the deduction. With a Roth IRA, if you make above the top of these ranges, for example, for singles, if you make more than 144,000, married, if you make more than 214,000, you cannot contribute to a Roth IRA. So you'll have an issue if you try and doing it, and if you open an account, you'll get potentially a penalty and a fine from the IRS. But you're not allowed to contribute if your total adjusted gross income for the year is above those limits. Now, if you're within the range 129 to 144 or 204 to 214 for married couples, your amount you can contribute is phased out. So you can't make the full $6,000 contribution. And I would say go to look at the irs.gov site or other calculators that will exactly tell you what every $1,000 will reduce your contribution amount by. It's basically the difference between the threshold divided by 6,000. And then if you're below 129 for singles or below 204,000 for married, you can make the full 6,000 contribution, or 7,000 if you're above 50 for 2022, which is really good. And again, the logic is, if you feel your taxes are going to be higher or more after you retire, Roth IRAs provide a great way to build that tax-free retirement plan over there. And I would definitely recommend, especially if you're younger, because your income is probably going to be lower and you'll qualify for these plans, do it. It's a very effective plan, and all the gains, eventually all the after-tax contributions can grow tax-free. And so after 59, you'll have a very nice source of tax-free income that Uncle Sam cannot touch. So hopefully I've given you a quick update on all the different IRA, 401k, and Roth IRA changes for 2022. I'll put some links below to detailed articles. And if this video was useful to you, please hit the like button below. Thanks. Bye-bye.